the largest shareholder. Andrew Smith, the largest shareholder and CEO. Lewis Romano, Executive Director and shareholder. Jason Serafino, our very capable CTO, and Warwick Lace, who was in no small part responsible for the preparation of the quarterly. So on that basis, I think I'll hand over to you, Andrew.
Thank you very much, Hugh, for the welcome, and certainly is a very exciting quarterly presentation. I think that it's been absolutely a time for us to transform from, I think, a stock that had a wonderful potential, a huge amount of investment in technology, to a business that can now demonstrate that it can stand on its 2 feet, be cash flow positive from July next year, or next financial year, and an organisation that can really start to deploy its technology in the areas that have the most value, which is just in Australia, a $2.5 billion addressable market. So it's a huge opportunity we've got, and I think we're right at the beginning of that. And it's great to see these results come through this quarter. Some of the highlights that we'll talk about today is obviously 117% PCP on last year, 88% quarter on quarter to a $6.1 million revenue growth. Now, obviously, a large proportion of that is through the acquisition of ARMA, a traditional but modern collection agency that's been converted into a digital-led collection agency. Record monthly revenue in March of $2.9 million, and a revenue run rate that's looking like we're going to be in excess of a $35 million business per annum. So they're all very exciting, and a combination of not just acquisition, but also very strong organic growth coming from new clients that we'll get into later. As Hugh mentioned, a very critical component of a small tech listed business is to make sure that we're no longer going to the market and asking for capital, and that we can demonstrate that the business is self-sustaining, and therefore we need to demonstrate a path of profitability. And I'm very, very excited to say that, from July 2022, it will be cash flow positive. So very exciting, times, and a big transformation time in terms of pathway to profitability. The other most exciting development in the last quarter has been the expansion internationally. The platform went live in South Africa with Tech Hub 5 months after signing the agreement. Tech Hub, and more exciting is Tech Hub plan to accelerate the rollout to an entire multi-billion-dollar portfolio rather than just start with a trial. Really shows the belief that they have in the technology, and also the Credit Clear technology team. So very, very exciting, and well done to the tech guys who have worked day and night to try and get that off the ground as quickly as possible. The fourth and probably most exciting part of the last quarter's performance was the integration of ARMA. All right, some of you may or may know, but I was the former CEO and founder of ARMA along with my business partner, Shane Ashton. And we were really excited about joining Credit Clear and understanding what the digital-led process would do to our traditional business. We always had a strong belief that the market and our customers customers were ready for an exposure to a really intelligent, artificially intelligent-led collections tool, and we were completely overwhelmed by the improvement that it made to our internal business. So just some of the expectations were 292,000 accounts were loaded into the digital platform in the last effectively 10 weeks. It had a huge uplift in terms of performance within the sectors that we trialled it upon. In fact, one customer who was one of our largest customers in that particular portfolio of trialling it saw almost a 40% uplift in recoveries in 1 month. So what we thought was going to drive, maybe a 20% plus uplift, had almost a 40% uplift in recoveries in that month. So some really encouraging signs early on, and it really talks to the point of why, ARMA joining Credit Clear was such a strong and good acquisition following the results. So let's talk about what our offering is to the market. And I think one of what the offering in the market is really around a hybrid collections offering. Whilst many of our clients' customers will be solving their accounts receivable challenges through digital. There's still always going to be a need for those who need to speak to someone to be able to flow through to a call centre, speak to very well trained specialist people that can help solve a situation through a traditional methodology. But what we're seeing is that a huge proportion of customers were ready for dealing with their situation on a really intelligent messaging platform, whether that be through SMS, whether it be through WhatsApp, or whether it be through email. So what we're seeing is a great uptake in that. The second and probably the most clear advantage in terms of our special secret sauce is the Credit Clear's modern approach to collections is about more than just digital. We use the artificial intelligence, machine learning in our messaging to improve the overall collection experience from the business, from our customers. And what we're seeing is significant uplifts in not just total collections, but also in terms of speed at which people are able to solve their collections. Being able to monitor and analyse that performance, certainly with the ARMA acquisition, has really shown us that, you know, where a traditional approach where we might send letters, make phone calls, has not been successful, where we rolled out Credit Clear and very, very quickly within one message that customer's been able to enter an arrangement, stick to that arrangement, and provide a 10 out of 10 NPS feedback score. So what we're seeing is that, you know, the market's really ready for something that's going to be transformational like this, and the customer experience is getting more and more improved. The question is, how do we scale up as quickly as we possibly can to answer all the new customer inquiries that are really looking to use our services? And that's where what we're finding is probably going to be one of the biggest challenges moving forward, because there's certainly significant global tailwinds coming that are pushing this. Naturally, there's lots of things such as interest rate increases, inflation, unemployment that are all really pushing towards our clients and our prospective clients really looking at alternatives of how to manage the accounts receivable process in a more efficient way. And what we're seeing is that rapid adoption of technology is being pushed not just by our clients, but our clients' customers. There's a strong demand where clients are now saying to us, we need to provide alternative solutions rather than just traditional call centers and outbound telephony or letters to try and help our customers pay their bills on time and help us retain and understand what our clients need. So what we're looking to do is grow the consumer portfolio through a unique offering positioned to capitalise on the significant increase in the amount of customer debt that companies are holding. COVID's done some really significant things to the market. One is there's been a lot of changes in the way that people deal with customers. The essential services sector, whether it be gas or electricity or water, many of those bodies were either not allowed through regulation to hand out customers to debt recovery, or they were not allowed to credit default or pass those customers through an external body. So what they're looking for is more innovative solutions for them to use internally to try and solve that issue, to make sure they manage that customer vulnerability really well, because in essential services and utilities, no longer can you just cut the account off, sell a debt and forget it. So there's actually far less debt being sold, and there's far more debt being actually held by our customers and our customers' clients. So what we're seeing is a reduction in the debt being sold at the moment and an increase in the amount of debts being managed on services. So therefore, another big push towards leveraging technology, leveraging outsourced services to be able to help manage those issues. And lastly, look, following the Royal Commission into banking and insurance and another number of changes across lots of industries, there's a huge heightened focus on the social responsibility around customer treatment. And whilst we've always had a really focus on making sure that we maintain the integrity of our customers' brand through this process, I don't think there's anything more valuable than taking control of a customer engagement through a really easily used piece of technology that allows people to deal with what can be a very difficult situation in a non-intrusive way, and then allow them the time to make a decision on how they'd like to repay an overdue invoice or an overdue payment. And what we've seen through this process is a huge improvement in NPS scores, Net Promoter Scores, which see not only are we driving performance through better recoveries and faster recoveries, what we're actually seeing is a huge improvement in the way that our clients' customers are responding to that particular methodology. So some really wonderful, I'm going to say, market conditions which are really helping us grow. Right, a little bit of a revenue snapshot in terms of the last quarter. $6.1 million revenue for the quarter. This naturally included a proportion of ARMA's revenue being looped in early in February. So look to see this continue to grow next quarter. But most excitingly was it's 117% up on this period last year and 88% up on last quarter. A particular highlight and really demonstrates the strength of the synergy between ARMA and Credit Clear was the $2.9 million revenue month for March, which for us was an absolute record. But what it doesn't highlight is the strong organic growth that's coming into both Credit Clear through its various businesses. So some wonderful and exciting improvement in numbers. Yeah, a little operational highlights are, 695 active customers. What we're doing is reporting on active customers now that are actually referring and we're actively working. 734,000 total active customers that we're currently communicating with. There were 65 new clients won in the quarter, and as I've said, this is probably the most exciting leading indicator for us is that the number of customers wanting to utilise Credit Clear services to solve those issues that we talked about earlier has really dramatically increased. And what we're seeing is that where there is a bit of a bottleneck and where we've got our greatest challenges, how do we onboard those customers? How do we get them deployed, rolled out, and make sure we maintain very high levels of service? So a quick shout out to Veronica, Jason, and the team in there in customer success, because they've been working day and night to get those customers deployed, and it's been certainly a very big feat. What we're also seeing is a $4.1 million digital communications for the quarter, which is a huge increase in previous quarter and a very large increase on this time last year, which is fantastic. The last point, probably almost the most important point, is having $55 million worth of total committed payment plans. Now, if we look at another good leading indicator for the future, that is really the source of future income that's already been locked in. So as that $55 million grows, what you'll see is the future stuff becomes a little bit clearer in terms of where our income is going to come from and how we can drive future growth within the business and rely upon that as almost one of our greatest assets. All right, so I know that we've probably talked about this 3 or 4 times, but I want to make sure it's a very clear, focused message that we get across, and one is that pathway to profitability by July 22. Cash flow positive, the business will be cash flow positive by July 22. Revenue growth. Revenues have materially improved this quarter with all parts of the business achieving strong growth. March was particularly strong with $2.9 million in revenue. Cost base. One of the key focuses for me personally is bring a very disciplined approach to the way that this business was run, whilst continuing to preserve that unique technology investment. Now, both Shane and I, who's the Chief Operating Officer, we've always run our own businesses, and I think when you bring a owner-operator approach, then I think you get very, very close to looking at each dollar that's being spent and really understanding whether or not that's a good investment or whether or not it's not a good investment. And what we've done is looked at synergies within the businesses between ARMA, Credit Clear, Credit Solutions, and other businesses. And what we've done is really looked at how we can actually streamline those and get maximum benefit, and look at cutting any areas that we weren't getting maximum benefit out of. So what that's seen is a huge rapid increase in revenue, whilst not having impact in terms of operational efficiencies. So very, very, very pleased to see lots of those savings flow through probably in the next quarter. The acquisition uplift significantly increased our operational scale. We've added a material digital volume throughout the platform. And what we've been able to do is leverage Credit Clear's strengths and some of ARMA's strengths and overlay them on top of each other. I think that, you know, ARMA's always had very long and deep relationships within this accounts receivable sector. And what we're able to do is go and leverage the really strong capability in terms of technology that Credit Clear's had, and deploy it to the right people in the right areas. So what we're seeing is that marriage that's really demonstrating some really great uplift in terms of customer onboarding, new customer acquisitions. So I think it's time to pass on here from someone else, who's Jason Serafino, our Chief Technology Officer, to talk about what's been going on at ARMA.
Thanks so much, Andrew, and hello everybody. So in terms of the ARMA role, that's been a really exciting demonstration of the rapid adoption of digital. I think you signed acquisition maybe the 2nd of Feb, I think it was, Andrew, and from signing, introducing the teams, developing the plans, to integration and rollout, we were live on the 10th of February, I think 8 calendar days later, with 290,000 accounts on the platform. And as with all our digital services, once we've set up the platform, it's a highly automated process. You know, data flows in, our workflows start, engaging customers, processing payments, passing data back to the ARMA CRM systems, and there's no human intervention required to scale that service. And we've really seen these amazing results in such a short time as a result of that, really. 1.6 million collected on the platform, over 3 million in payment plans running as we speak. And we've deployed already to 47 clients, digital to clients in ARMA. So really demonstrates just how quickly we can scale a digital business and the impact that it can have. Turning to the next screen. The all exciting South Africa rollout with Tech Hub. So we have successfully commenced operation in South Africa. To do this, we've deployed a copy of our platform within South Africa. Just like Australia, we do need to make sure that data remains resident within South Africa and for regulatory and contractual reasons. So we've localized the platform there for currency and regulation and other factors. We've connected to local comms and payment gateways so we can process in Rand. And we've also integrated with the core Tech Hub CRM system. So to achieve that just with one of my squads in 5 months from signing a partnership agreement is a phenomenal achievement. We had Christmas in there as well, and we did take a break. So 5 months, really good demonstration that we can efficiently scale internationally, and we'll only get faster at it with practice into more regions. So the Tech Hub partnership is very exciting for our business, our digital product and growth, for a few reasons. So first, obviously, we get access to a very large portfolio, $1 billion plus in debt. With the eyes on investment, Tech Hub has now access across 18 countries, including multiple African nations and India and the United Arab Emirates, so huge scale. Secondly, like ARMA, it's an entirely automated digital offering. So once we set up, we can process pretty much any scale volume with marginal increase in effort and cost. And also like ARMA, it's a single integration for all clients. So new clients that Tech Hub gets or we acquire together can just automatically flow in. And it's very sticky business. You know, the Tech Hub teams spent now 5 months deeply integrating the platform with us. And you don't kind of readily undo that level of integration. And finally, we retain our IP. We're a bit of a black box running our AI and behavior-driven workflows. So really exciting. Stay tuned. We'll have results to share on this in coming updates. To the next screen. So I want to just touch on our competitive advantage here. Are a market leader in this space, having pioneered it, and we intend to remain that way. So we do that by constantly testing and pushing the envelope of performance. So we use what's termed champion challenger testing, which has been developed within our optimizer module in our platform. And that's where we take a portfolio and we split it between two cohorts, and we send part down through a champion workflow, which is the current way of doing things, and we send part down through a challenger workflow where we tweak messages or channel or timing, and we scientifically measure which of those two wins. And we've delivered amazing average uplift of 19% since we launched our optimizer module for our clients. And I really do think that demonstrates just how much potential there is for digital disruption in this market. And the reason why we can continue to deliver such consistently strong results is we bring these 4 different aspects of the business together, and together they make a really powerful proposition. So, you know, the first here is data. It's the lifeblood of the business. Being first to market years ago, we have developed this amazing data set, nearly 60,000 variations of digital treatment, and we've tracked every customer interaction through that life cycle, and that provides a very powerful resource for both our internal analysts as well as our AI and machine learning algorithms. Secondly, and I don't think this can be kind of overstated, is we match that with collections experience, and it's through that combination of deep industry knowledge, which we get through, you know, ARMA and credit solutions our DCA divisions within that have got many years of experience in debt collection, with our digital market leading experience, and that's what really is the secret sauce. The digital platform itself, a modern, built from the ground up as a modern cloud native digital application, market leading. We are narrow and deep in terms of what we do. So unlike other collections platforms, we don't do, trust account reconciliations. We don't do document production. We don't do, management of call centers or any of that stuff. We do digital engagement and payments. We do behavioral analytics. We do deep analytics. We do deep AI. And because we're narrow, we can really leverage our investment to be and remain the best in market. And finally, this access to clients and data. We knew when we started as a digital only organization, we knew how hard it is to penetrate this market. We're a bit of an outsider, and the market is there's high barriers to entry in this market. You know, it's all about relationships and who you know and how you're trusted. And so now as a combined group, we have this ability to be the trusted partner with our clients and bring them on the digital journey, much more rapidly than, say, a pure digital organization can compete with us. So let's talk about results, the proof. So the first there on the left-hand side, we've got ARMA. So what we did with ARMA, as we do with our clients, is initially we rolled in the initial digital workflow that we did in that 8 days. We actually took the ARMA templates and pretty much brought them onto our platform. We overlaid our frictionless payments process over that. And we ran that as the first workflow in that 8 days. And that already delivered a really good uplift. But that is only the start of our service. And from there, we're running champion challenger tests to see how we can improve. And this is the first one. What we did is we took that workflow, we analyzed it based on our 60,000 different treatments experience and experience of our teams, and we came up with revised template and workflow. We ran that as a side-by-side champion challenger test on our platform. And the results are there, amazing results, 22% uplift in collections from this first experiment, 32% uplift in engagement, 16% uplift in net promoter score, which is really interesting because we can do scientific testing to see if you can get better customer experience. And I don't think anybody else does that in the industry. And we also saw a 20% improvement in the time to recover. just in this one experiment. It's a phenomenal, as Andrew will tell you, a phenomenal outcome and really exceeding their expectations. In other news, we ran a champion challenger test for Toyota, in which we trialed a digital first contact against a call center contact for people who'd missed a direct debit payment. And the digital engagement produced a 200% better result in getting those customers to commit to pay. That's 3 times better result in terms of the number of customers who came in to pay. We also saw this incredible NPS score for the first 3 months of +64, which does go to show just how much customers were preferencing digital. Another optimizer test that we ran for a major water utility to continue their journey. We again improved templates and workflows. Ran it as a champion challenger test on a cohort of customers who had emails and mobiles. A 24% uplift in collections there, and a 20% increase in NPS. Verita, one of our near and dear, very strong clients. We've been working with them to continue to optimize for some time now. What we did here is we have very deep analytics at every step of the workflow, so we can look at every message and we can see how it's performing. And our customer success teams work with a client to analyze that and come up with ideas about how we can improve. So we identified a step in the workflow, and that wasn't performing as well as the others, or we thought we could improve. We did a champion challenger test on that. We improved conversion rate at that step of the workflow by a further 26%. More customers paid, and NPS went up by 46%, which was a fantastic side effect. In other news, we launched New Zealand collections for Prosper. And then finally, Suncorp, we hit a major milestone with Suncorp where we deployed our fully integrated version of our platform. So now we are deeply integrated with the Suncorp core claims processing platform as their digital engagements and payments solution. It's a very significant achievement for the team, given how difficult it is to integrate with these core kind of platforms. And now we are integrated. Really look forward to seeing the claims numbers jumping as they're starting to do, and sharing some case studies as we go forward. We really love insurance. It's a real high potential industry, big volumes and under-leveraged in terms of digital, and a partnership with one of the biggest players in the space is fantastic. So lots of great news. Back to you, Andrew.
Yeah, good. Thank you very much, Jason. I think that he highlights some very good points around the synergies between the businesses. And what we're finding is that almost every meeting we go on to, certainly Jason and I have just been at an onboarding meeting with a new client. You sit in the room and look, it doesn't take very long before you realise that the opportunity to get involved early on in the collections life cycle and help solve the issue. Whereas, we've got a customer in the room that sends a physical letter as the first point of communication. How much opportunity there is to just work with existing customers and new customers to really revolutionise the way that things are being done in this sector. So very exciting times. Look, the Credit Clear outlook, once again, based on annualised revenue from March 2022, is looking like there's going to be a greater than a $35 million per annum annualised revenue, and that's obviously off the back of some really strong results in March and growing. This does not include expected revenue from TechHub. I know there was a good question in terms of how much of that $1 billion portfolio that TechHub has under management, how much that Credit Clear is going to be deployed at. I'm very excited to tell you that the rather than giving us a trial on 100,000 portfolio, or 100,000 customer portfolio, what they've decided to do is roll the Credit Clear solution out to the entire portfolio. So what that is going to provide us in terms of revenue, I mean, I wouldn't like to forecast that, but it's exceptionally higher than what we thought it was going to be in the short term. So not to mention the recent changes with TechHub having an interested party taking a strong position in their stock, has given us some huge opportunity to diversify into other markets as well off the back of that partnership. So once again, if we can get to a $35 million turnover business in Australasia, and then we can start to add significant revenue from Tech Hub and other markets, then I think that's some really exciting numbers to follow in the quarters to come. Once again, we're going to talk about pathway to profitability. It's one of the most important goals of us as an executive team at Credit Clear, is to make sure that we're cash flow positive. A number of institutions have said that capital markets currently are closed for those loss-making technology businesses. There's some well-published challenges going on in that sector at the moment, and we want to make sure that we're a business that's focused on fiscal discipline, making sure the expenditure is only in areas that are going to maximise our growth. And certainly being a significant shareholder in this business means that each dollar that gets spent certainly is applied from a discipline point of view. International expansion, not just within the South African sector, but every single customer that we're presenting to. One of our largest customers has significant operations in the US and Europe. And after our first demonstration of using this digital-led collection strategy, made a recommendation to look at Credit Clear, not just in the local markets, but internationally. So I think those opportunities will start to come, and we'll follow those opportunities into the markets that we can, rather than just go and setting up shop in those markets and then hoping that we can go out and win business. What we'll do is we'll grow those organically, make sure we've got a really good invested customer that's going to back us into those markets, and we'll grow with them. So that's a very, very good, I think, approach in terms of growing without necessarily spending too much time or money rolling up big costs in those markets before you've got a customer or customers to roll them out to. Back to the ARMA acquisition, 292,000 accounts already integrated in the Credit Clear platform. The platform is having a significant uplift in terms of margin, in terms of performance, and that is flowing through to our customer satisfaction. What we're seeing is more of our customers looking to deploy the Credit Clear solutions earlier on in their customer life cycle to support their internal programs, rather than what predominantly we've done is deploy the ARMA late stage collections portfolios to Credit Clear, and we're seeing a huge uplift there. So already $3 million worth of committed to payment plans and 1.6 million digital payments already received. And I'd say that that's only just the tip of the iceberg when it comes to ARMA's acquisition. Next one.
Do you want to, Katie, do you want to ask any questions?
We've got a couple of questions in the chat, so we might start with those and then we'll go from there. Hi Andrew, great to see the growth momentum. What will be different in July 2022 resulting in cash flow positive, higher revenue than March 2022 of 2.9 million?
Yeah, look, I think that it's going to be a combination of both, right? I think continuing to grow our revenues whilst managing costs, right? So what we saw, as demonstrated by last month's revenue being 2.9 million, is that you can continue to rapidly grow revenue while still managing a disciplined cost approach. So what we're going to see is as this next quarter flows on, a lot of those disciplines that we've brought into the business over the last 2 months flow through to the bottom line in terms of cost reduction, whilst we can still continue to grow our revenues. We do recognise that as we bring on new customers, we need to add to the customer onboarding team. We certainly need to add to the technology team, and we also need to add to that sort of traditional bums on seats in the call centre team. And what we're seeing is that those projects are being deployed as new customer acquisitions are being brought on. So where in the past I think that we would put bums on seats without necessarily knowing and having surety in terms of new customer acquisitions and new revenues to support that extra cost.
Great, thanks. What is the international growth strategy? I mean, you touched on this a little bit before, but is the focus on partnerships like Tech Hub, or are you looking to enter them on the ground, or both?
Look, Tech Hub's an absolutely perfect partnership in terms of the South African market. In speaking to Cobus, who's the Chief Operating Officer over there in South Africa, I think we were personally in similar positions where I was CEO of ARMA, where we were looking to protect our growth and our existing portfolios rather than become obsolete. And we recognised in order to protect our business, we needed to invest or partner with a technology business like Credit Clear. And I think that entering those markets through partnerships do two wonderful things. One is minimises the cost of implementation and rolling up a whole business in a new market. It also means it's going to minimise the cost in terms of managing the overflow. So like Tech Hub, where it's done that through that partnership, we've focused on our cost investment in terms of the technology, whereas Tech Hub will support those customers that aren't able to, pay their account through the Credit Clear technology, need to flow through the call centre. So it's almost a really good match made in heaven in terms of doing expansion through partnerships. It also gives us some great opportunity to look at other markets, like in the UK, where we've got existing customers in Australia with big operations in the UK or in the US, and do it through a partnership like a Tech Hub, where we're bringing them business, but also sharing in the upside together. Some good ones. One-off costs.
In the chat?
Yeah. So I'm just reading them as they go.
Maybe.
I just think, is there anybody on the call who wants to ask a question, bearing in mind it's probably getting towards lunchtime? Is there anybody who wants to ask a question, or you want to go offline to answer the various questions? How do you want to handle it, Andrew?
It's good. I mean, there's a couple coming through. Are you looking at further acquisitions of traditional credit collection companies? The answer to that is no, we're not. I think that we've got the right mix of traditional operational people and current technology people, that where we know who the customers are that we need to be talking to, and we've got the relationships with them to be able to talk to them. I don't think we need to necessarily grab that many customers. It's our focus to try and win customers. As far as international, if there's a really good partnership that we identify in another international market, that could be a good opportunity for acquisition. But I think domestically, we won't be looking to acquire any more collection companies. Sorry, Hugh, I just got into answering that question.
No, that's fine. That's fine. Do it the way you want. If you're happy, if everybody's happy and you answer these questions that are coming through the chat box or whatever it's called, that's fine.
Yeah.
Room,
I
box.
have two questions, Andrew, that have been submitted to us. So the first is from Julie, probably for Jason. What was the cost to deploy in South Africa? And do you expect other international markets to be at a similar cost?
Yeah, sure, I can do that. So it was obviously internal time and materials in terms of, there's not really external. We've got hosting costs, cloud-based hosting costs, but they're marginal, but only once it's up and running, which we are now. So it's really time and materials. If we broke up our internal costs, it'd probably be, maybe 250,000 or something like that as our internal costs. So it's pretty marginal. Yeah, might even be less than that. And then I would anticipate similar for other markets. Each market's got perhaps their own regulatory regime. Some will be a bit easier than others, but it'll actually come down. We've automated a lot of that process now, so we'd expect it to be faster as we do more.
Second question on the international expansion front, probably for Andrew, a personnel question. Who takes the lead in terms of international growth? Whose responsibility is that?
Very, very, very good question. I thought it might have been from Lewis himself, but no, Lewis, obviously one of the executive directors and co-founder within this business. He's really playing a lead role in our international expansion, and has been primarily focused on the Tech Hub expansion. But there's lots of other opportunities he's working with at the moment. As they become more and more real, we sort of expand upon them. But there's more and more opportunities coming to us and coming to the table, and they're being handled predominantly by Lewis Jason and the technology team, supported by me and Shane and the executive team.
And a final question from my side being submitted from Stephen. With interest rates going up, buy now, pay later services might become even more popular. What are your plans for the buy now, pay later space?
Look, I mean, buy now, pay later products couldn't be any more better designed for a technology accounts receivable service, right? Where they're high volume, low value. It is too expensive to service them the traditional way only. Whereas if you try to send letters, make phone calls to collect a $25 or $30 or $40 debt, or a $30, $40 payment, it's impossible. So with that widening market, I think that provides a very good opportunity for a technology-led business like Credit Clear.
Very good.
I think just the one input I would make to the issues regarding international is Tech Hub is a great deal, but I think equally one needs to say, well, it's always a really good idea for companies to make sure that they cover the field in their own market. You know, it's a big market with great opportunities, and we'll create a pretty bloody big company out of just the domestic market if we meet our aims and goals. But open, of course, to foreign opportunities, but we're not going to run before we can walk.
Yeah. Yeah, look, we come from a business that has funded our growth through existing earnings, right? And I think that means that when we look at really expanding internationally, we'll have a very strong foundation of a business in Australia to launch from. That's not to mean that we're not going to ignore really good opportunities that come to light through existing customers in Australia or international partnerships approaching us, or us doing some work to look at the greatest opportunities in those markets. But absolutely, like was said before, our focus is to create a very disciplined, high growth business that reinvests earnings back into technology and then launch internationally from there.
Good.
Okay. Thanks.
Well, thank you very much. Thank you, Andrew and Jason and so on for presenting, and thank you everybody for coming along and hearing the story.
Yeah.
Afternoon. Thanks.
Thank you, everybody.